Imagine a stock that is skyrocketing for the past 15 years. That shows very steady dividend growth, high to single digit revenue growth, earnings per share growth, dividend growth for the past 5 and 10 years. And yet, there are multiple problems with it and multiple headwinds. Today, dividend investors, I'm going to talk about Apple. And yes, it is one of my largest holdings in my portfolio. I've made a lot of money in it because I've invested in 2014. It has made the joy of Warren Buffett the smartest investor in the world. And yet, there are some headwinds coming our way. 2 weeks ago, I asked actually my Twitter followers, and if you haven't followed me on Twitter, just type in the dividend guy and hit me up. I asked my followers, like, what do you think is the number one threat to Apple? And actually, it's kind of funny because we had like a huge thread and a lot of answers, very varied answers from valuation to the iPhone to innovation. So we're going to look at them, each of them today. And I'm going to let you know what I do with the stock in my portfolio at the end of this video. So let's go back in time. The time where BlackBerry was the best smartphone ever. That was a long time ago, right? I remember like BlackBerry was just my favorite tool, and I still miss that keyboard because I'm not really good with my fingers and I just like type in all the time and I have to correct, so I hate to use the iPhone for that, and I love the BlackBerry. So the number one threat that we have seen back then was innovation. BlackBerry dominated the market, and then in a blink of an eye, like a few years, and then Apple and Samsung came in and they grabbed most of the smartphone market, and BlackBerry kind of like completely got disrupted within a few years. So a lot of investors are asking themselves today, well, what's going to happen with Apple when the iPhone is not going to be like one of the most premium smartphone on the market? What if some raving fans started to wonder what's going to happen with the iPhone and maybe try to look for a Samsung or a Google Pixel or an LG phone and then just move away? Well, at this point, I don't think it's going to be a problem. We have accused Apple of being a one-trick pony for several years, and yet they have been able to come with innovation. They have created this ecosystem around their iPhone and other devices, and they've been able to maintain the quality in their product, which makes people to sell one iPhone and buy another one when it comes to renew. And at this point, it becomes a very sticky business, because once you're used to a system, you don't want to change and try to learn another one. I mean, we're lazy, and I'm not seeing this happening right now. They are able to grow their business year after year, iPhone or not. Another problem that was mentioned, and this one is definitely accurate, is the possibility of having a recession. If you look on this graph and we look at the 2008 and the 2020 recession, we can also see that revenue weren't going that fast, right? It's normal. I mean, if you're afraid of losing your job, you're not gonna spend like $1,000 or $1,500 for a new iPhone, right? You're just gonna keep your iPhone and you're gonna wait and move forwards. No more iPads, no more MacBook Pro, and so on. You're not gonna treat yourself with the next generation of Apple products. However, when you look at the graph, you can see that after the recession usually comes a wave of innovation, a wave of new products, and then once you have more money in your pockets, well, boom, you're just buying every Apple product that you see. And this is what happened in the 2010. This is what happened after 2020. Now we can see we're probably going to go back into a slow growth mode for a year or two as interest rates are higher, and then we're going to hear more about layoffs. But overall, we can see that this trend, if they continue to grow their business as they've been doing for the past 10 years, they will be able to find other means to generate revenue growth. Speaking of those means, as you can see here, you can see the year in the revenue per item. So iPhone, Mac, iPad, wearables, and home accessories and services, 2020, 2021, 2022. One thing that I love about the business is its ability to generate side business. You know, like those small side gigs generating billions of dollars every quarter. Well, this is what they have been able to do with many of their products. You know, one strength from Apple is they don't need to be the first one in the market, as the Apple Watch is one of the best examples. They've looked at what have been done in the past. They've seen competitors like biting their teeth and then breaking their teeth, on this kind of like new products, trying to develop the market. And then Apple came in with their billions, developed a new product, probably not the best one, but the most accessible, and they benefited from the Apple brand. And then boom, they're making money from it. Now, one problem that comes with this type of business model, and that was highlighted in my Twitter feed many times, is there's a lot of people that are not super happy with Apple Store. The way merchants are being treated, the royalties that must be paid, some regulators will take an eye on that, and we may see this source of revenue going down a little bit moving forward. So that could be another tailwind. The other thing that we can see here is also due to the recession, but due to the overall market, it's harder now to create a better phone with a better camera or like thinner or more powerful. There's a limit of what you can do to make it make consumer wants to change from one iPhone to another. So we're gonna probably see sales going down, and even in China, we can see that on the second part of this chart, we see that China isn't growing double digit as it used to anymore. Speaking of which, the most important headwinds I can see, the most important problems actually I can see with Apple is its dependence to China. Most of its products are being manufactured in that country. We're well aware that they're still battling on how to manage COVID. So in North America, we're past that problem, but they're still looking at lockdowns, and now the population is not super happy. And now we have a lot of workers for Apple firms that they're going in the streets and they're making claims and so on. So it's going to be a little bit more difficult. Plus, we have a tension between the US and China that is still there. We had the tariff war not too long ago, but we might come into another tariff war going forward. So it's not going to be easy for Apple to navigate through those production problems or potential problems that they may have going forward. So I think would be pretty much a good idea to just move some production outside of that country. But in the meantime, they're highly dependent on what's going on in China. Last but not least, overvaluation. A lot of investors pointed out that Apple's PE ratio is pretty high right now. We're talking about like 21 times the earnings. And when you look back over the past 10 years, never happened or barely never happened. So at one point you're just thinking, well, this stock used to trade around 10 times its earnings and now it's at 21 times. So yes, it's way below that 37 or 38 times the earnings during the bull run the company had in 21, but we're still far away from this 10, 12 times the earnings valuation from 10 years ago. But here's one thing that you must consider. Back in 2013 and 14, there was a lot of criticism around Apple and a lot of concerns around the fact that it was a one-trick pony, that it couldn't generate any more growth with the iPhone, and that Samsung would eat it alive. And this is why the company was trading at such a low valuation. When you think about it, the company is still growing right now. It's still generating some revenue growth, some earnings growth, and they're generating tons of free cash flow every single quarter. They're using those $1 billion to invest in research and development and make sure that they keep up with innovation. So at this point, I don't think that Apple is overvalued at 21 times the earnings. Obviously, the future will tell us, but when I look at the dividend triangle that I see right now, I can see 3 straight lines going up, and this is a great source of comfort for me. So as long as the narrative will stand and the numbers will prove that narrative, I'm going to hold on to my shares. At this time, Apple is about like 11% of my portfolio, so it's not too heavy. It is heavy, but it's not the end of the world. I can live with that. The rest of the portfolio is well balanced across other companies, and I'm comfortable having about 10% of my shares of my portfolio invested in that single great business. So I'm going to hold on to my shares, but I'm going to follow those headwinds very carefully in 23, and I may trim a little bit more just to make sure that I am not overexposed to another tech giant that could be falling. At this point, I think that is not going to happen, but you'll never see. I'm curious to know what you think about Apple. What have you done with Apple in the past few years in your portfolio? Do you think that you should buy more? Do you think about selling? Or you just don't have it in your portfolio and you're very happy with that? So hit the comment below. Let me know what you think about it. And we're going to talk again next Thursday. And until then, don't forget to stay invested.